Okay, good morning. If everybody could take a seat, we'll get ourselves started. Welcome to the panel on a focus on impact investing in affecting real world change. My name is Sean Gilbert. I'm the Chief Investor Network Officer for the Global Impact Investing Network. I'll be moderating today's session. For those of you who aren't familiar with our organization, we're a nonprofit network that was set up to support the growth and effectiveness of impact investing. I'm joined by an exciting panel who will introduce themselves in a few moments, and I'll provide a bit of context on the session in terms of the topics that we'll be talking about. But you'll learn a lot about the people on the stage in a moment. Before we do that, it's kind of helpful to understand a bit about who we have in the room. So I'd like to do a quick show of hands on a few questions. First of all, if you're an asset manager, or you consider yourself an asset manager, could you raise your hand? Okay. If you're an asset owner, would you raise your hand? Okay. And if you're a service provider or somebody else that doesn't fit an owner or manager?
Awesome.
Okay. Next question would be, have you made an investment with the intention of delivering a positive real-world outcome? An investment where you had that conscious intention at the start. Okay, and then if the people have their hands up, how many of you would say that you have an investing strategy for regularly delivering real-world change and real-world outcomes? Okay. So today's session, as we say from the title, is around that whole question of how do you affect real-world change? And it's probably worth saying at the start, we'll be talking about examples of different ways to do that. There are two general ways you might think about it. One way to affect a real-world change is to try to reduce something that is harmful or try to reduce a negative outcome. And so, for example, moving a company from plastics packaging to something that's a biodegradable packaging. Equally, there's a different route, which is investing into solutions or investing into alternatives. So perhaps investing into extending healthcare services into underserved communities. We'll be talking back and forth about both of those and trying to explore some of the options and opportunities. And these opportunities vary across asset classes. And that's also an important thing to think through when you're putting together your ideas around this. And the kinds of contributions that you can make as an investor are also part of what we'll be trying to talk about, distinguishing some of the difference between things that you hope the investee will do, and then the opportunities you have as an investor, either through the terms of your investment, your engagement, or other means to try to help enhance the outcomes of that investment or the portfolio company. Now, probably everybody can think of individual investments, and a number of you have raised the hands of examples of individual investments that you've made. Going around yesterday, today, tomorrow, you'll hear other examples. Quite a lot within the PRI context is around engagement that companies do, or engagement that investors do in terms of active stewardship. What we'd like to try to do a bit with this panel and invite you to do when we get to some of the discussion a little bit farther along is to think about what are the strategies and processes, the policies that you can have in place that allow you to replicate that. Because it's one thing to be able to identify an opportunity. It's another to be in a position to regularly be able to identify and scale opportunities. And I think in some of the opening plenaries yesterday when we were talking about the challenge of sustainable development and the role that responsible investment has to play, there is a lot in there which is about how do we scale positive outcomes. So I'm joined by a fantastic panel, just working across, and I'll invite them to introduce their own organizations rather than trying to do it myself in their opening remarks. But we've got Paul Lacerte, who's a founding partner from Raven Indigenous Capital Partners, Gwen, who's the head of ESG, partner in Vauban, Hiroshi, Osha Mossberg, the head of sustainability at AP2, and Hiroshi Kaai, who's the deputy general manager in the Responsible Investment Strategy Office in Nippon Life. Now, just a word in terms of how we'll be using the time. We will be first having a conversation on the stage amongst the panelists, and that'll probably be going for about 40 minutes. But what we want to try to do with some of the balance of the time is rather than turn it into a Q&A per se, we want to actually turn the time over to you at the tables to give people about 20 minutes towards the end of the session to be able to talk with those you're sitting with, because there's certainly things to learn from those who are on stage and those that are bringing some of their perspectives. There's also things to learn from the people around you. And so you'll have about 20 minutes, and the questions we'll be inviting you to think about are, what have you heard in the conversation that matches your own experience? And how do you approach outcomes in your investing? So as you're listening to the conversation, keep those two questions in mind, because you'll have 15 or 20 minutes to be able to reflect with the people that are sitting next to you. So with that, let me turn us over into the panel discussion, and we'll start off with just a round from each of the participants, talking a bit about the question of how do you go about setting priorities? How do you go about thinking of all the things that you could try to focus on having a positive outcome around? How has your organization gone about deciding where to focus? And we'll just start with the asset owners and work across towards the managers. Hiroshi.
Okay. Hello, everyone. I'm Hiroshi Kaai from Nippon Life Insurance Company. Last year, I had opportunities to attend lots of outstanding sessions at PRI in person Tokyo, and learn a lesson which gave me broader perspectives. And standing here today, 1 year later, I feel like a dream come true, and I'm very happy to be here. And Nippon Life, where I work, is a Japanese life insurance company and one of the largest private asset owners in Japan as well. And managing approximately 80 trillion yen, it's $440 billion equivalent in assets. Although we are an asset owner, we directly manage investment in stocks, bond, loan, real estate, and funds, and have invested in over 1,400 Japanese companies. And Nippon Life is committed to becoming a future maker. At last year's PRI in person Tokyo, where we are the lead sponsor, we have adapted the slogan, together, let's be future makers. Some of you here today may recall the term future makers. And Nippon Life is thus placing the shaping sustainability outcomes at the center of our investment framework, with the aim of reducing system-level risks, thereby returning benefit to ultimate beneficiaries as the future makers. And as an asset owner, management premiums entrusted by approximately 50 million policyholders, Nippon Life places great importance on beneficiaries' engagement to understand their sustainability preferences. And we operate a nationwide sales channel, including sales representatives and independent retail agents and digital channels. Our primary channel is our sales representatives, which consisted of 108 branches and 1,466 sales offices. And we around 50,000 sales representatives regularly interact with policyholders. By using this, sales representative can understand beneficiaries' needs, including their sustainability preferences. This is a unique and powerful approach specific to Japanese life insurance company. And moreover, not only sales representatives engage with policyholders, but we also have opportunities for dialogues between our top management and policyholders. At our policyholder roundtable, called the Nippon Life Konwakai, we communicate our sustainability efforts and responsible investment activities to policyholders while receiving feedback directly from them. Through these repeated feedback cycles, we can reflect the preferences of other ultimate beneficiaries in our responsible investment strategies. This creates a positive feedback loop. It's a similar PDCA cycle. Besides, we also conduct an annual policyholder survey to understand the sustainability preferences of our policyholders as a part of beneficiaries' engagement. And then please let me share some of the sustainability preferences we've gathered this survey. Particularly noteworthy finding from our survey is the beneficiaries' preferences regarding the profitability and addressing sustainability issues. According to the survey, 65% of respondents indicated that they would like Nippon Life to pursue both profitability and the achievement of SDGs through our investments. Furthermore, 13% of respondents expressed that they would like Nippon Life to pursue only the achievement of SDGs through investment, regardless of the impact on financial returns. In short, responsible investment is about responding to the trust placed in Nippon Life by the ultimate beneficiaries. Next, When we ask the most important sustainability issues for policyholders, the biggest responses were climate change, and followed by natural capital. This result may not come up the surprise to many of you, but the next third most important issues, regional economy, may stand out as a more uniquely Japanese concern, giving Japanese aging and shrinking population. This is perceived as a system-level risk that resonates deeply with many people in Japan. Since Nippon Life has policyholders across all regions of Japan, this is a serious issue for our business as well. Although it may deviate slightly from responsible investment topics, and Nippon Life working on a comprehensive partnership agreement with local government to address this. We disclosed these results publicly in a meeting of representatives called Sodai-kai, the most important government body of Nippon Life, as well as the policyholder roundtable, as I mentioned earlier. And going forward, we will continue to listen carefully to the voices of ultimate beneficiaries and reflect their preferences in our responsible investment strategies. Thank you.
Thank you. Very thorough process. And two things in particular caught my attention. One was the and. So your policyholders want returns and the SDGs. They're not necessarily willing only to take one, at 65%, I think you said. And then also the point about regional economic development. Maybe we'll come back to that, with Paul and Gwen. But thinking about regions as systems, it's not just global issues of climate. It's also about places. Oh, sir.
Yes, AP2 is one of the Swedish government pension funds. And we actually have in our mission from the state to manage funds for returns and limited risk, of course, but also to manage them in an exemplary manner with responsible investments and responsible ownership. And for us, it boils down to being able to provide a good pension for many generations to come. And when we talk about a pension in Swedish, it's not just the money you get as a pensioner, but it's also the time you spend during your retirement. And so for us, it's very natural that we also want to provide for a good society and the environment in the work that we do. So in terms of our work with having a positive impact, we have focus areas for our sustainability work. We have climate, we have nature, biodiversity, and also human rights. And we strive to have a positive impact within all of these areas in different ways. Part of that is investing into solutions. So we have dedicated investments into sustainability solutions within all the different asset classes, really ranging from listed equities to PE to sustainable infrastructure, natural climate solutions, and also green, blue, and social bonds. But we cannot only do that, of course, with the pension money, because that wouldn't be good for the risks of the portfolio. We also need to invest broadly. And so a large part of the impact we can have is to be active in our ownership and really work with engagement. So that is an ongoing due diligence process within all of our focus topics, that we assess risks and we engage actively with the companies which we own.
Thank you. What you mentioned about it's not just the money, but it's also the time you spend. It's an interesting way of putting it, and an important one. Maybe we've heard from an asset owner perspective in terms of somehow you think about it at an asset management level. When you have a pool of capital which has got a committed strategy, that's a different scale within which to start thinking about how to prioritize the outcomes you want. Gwen, how does it look from the perspective of Vauban Partners?
So for us, it's quite specific. So Vauban Infrastructure Partners, it's an investment management fund which is investing in infrastructure. So we have around 10 billion euros of asset under management in core infrastructure assets, majority in Europe and North America. We are most of the time majority shareholder and very long-term investor. So it's a buy and hold strategy. So basically when we're investing in an asset, we are staying there for an average of 20, 25 years. And so when we select an asset and we pledge for some kind of purpose and impact, we are committed to it on the long run. So it's not just we select, we pledge, we sell, and it's done. So it's our strategy is very close to an industrial point of view. It's basically how we implement it in the business plan. So first of all, of course, in the due diligence phase, we have to make sure we have the excluded list of assets to make sure that we are not investing in some kind of sectors that we promise to do not invest in. Basically, oil and gas is based on our climate strategy. And then it's a question of how we find the right KPIs which are material for our asset. So in the due diligence, how we are going to set the right point based on the sector, on the geography, on the profile of the asset we are looking at. Let's say in infrastructure, it's not one for all. It's each asset is very specific based on where it stands, what does it represent. Once we have a right mapping, so we're using some very common database like SASB, which has a really nice impact mapping and very easy to use for investment team. And then we go deeper once we go for NBO phase. So once we go for binding, non-binding offer and then binding offer, we make sure that we have a clear view of where are the red flags, if any, and how we can improve it. So once we're investing in, it's in our shareholder agreement. In our shareholder agreement, we can set the tone and say exactly where we want to go. So there is no surprise. Once, we have the list also of reporting data needed, which is always the first surprise for our assets, but then it's what is very material for you, and then we have an industrial discussion with them. The investment team is trained to have this discussion. So it does make sense. It has to make sense for the investment, for the operational team. It has to resonate with them. If not, you don't have them on board with you. And then it's the 100-day action plan, and then the day-to-day asset management work, I would say. So how do we set those KPIs? Like I said, it has to be material. Of course, climate is one of our big topics. We have a climate strategy, which is pretty strong. But beyond climate, it's all the question about circularity, about biodiversity, about social issues, social license to operate. How do they work with their stakeholders? How do the local communities taking the asset per se? And behind it, speaking about it as an opportunity. So speaking about climate is it's easy to look at the climate risk, at the physical risk. I would say the first thing that it's speaking for all, but also the adaptation risk, how to do not become a stranded asset, and how to stay essential in the coming decades, because we'll still be there in the coming decades. But then it's a question of how you do the retention of your employees, what issues you are facing after the COVID. I don't know for your region, but specifically where we're coming from in Europe, all of our assets have been facing issues to employ new people and to retain the people they had on the ground. So how are you more attractive than your competitors? And values is one of the key. I'm not saying it's replacing the fact you're paying them, but it's an additional value to attract people. So not only saying you have values, but putting in place initiative to show that your values are making sense. Then it's a question of territorial footprint. So I was speaking about social license to operate, but how you map your different contractors, and supply chain is a big one too, but also how you work with local territoriality, how your asset is bringing a positive impact. And it works a lot also with the employees. I just have an example in mind. We are a first investor in fiber in optic fiber in rural area in France, and now in Spain also with Telefonica. But first of all, it was in Spain, and we did a specific research on the impact of the optic fiber post-COVID. It was during the COVID period and post-COVID. How did they help the local community to stay in place, to stay having business there? And they didn't have any data. We were working with a commercial chamber there. They didn't have any data, so we had to do a one-by-one report and go for a little camera in the market and speaking with the local communities. And it was very interesting to show that that impact is real, but not only to the local communities, to show them that we're bringing some solution, but also to show to our partners, to show to our employees, look what you bring to the ground. And it was very touching even for the investment team to see that they were part of it. So it's very rewarding, and business-wise, it did bring to another contract with the local territoriality to go beyond what we're expecting to do. So it's business, I mean, it's business means behind it, not only doing good, it's doing good for your business on the long run. So yeah, we are a big player of sustainable infrastructure in the sense that it makes sense for you to stay in the market in the decades if you do things in a good way. I'm just looking at my co-panelists because we had discussion before and really sharing a lot of good ideas there, but yeah.
Okay. So it sounds a lot is very tied to the individual assets rather than issues you're following across a portfolio of infrastructure. We'll come back to some of the more specifics around making individual investment choices. But Paul, maybe over to you in terms that you work on community development, which is a simple idea but a complicated one at the same time. How do you think about setting priorities?
Yeah, thanks, Sean. I wanted to do two things before I started here. One was just join in acknowledging the traditional Indigenous territories that were on here, the Mississaugas of the Credit. I was very honored that the chief took the time to come here and welcome us, and the drummers came out to drum and sing for us. So a big privilege to be here as a guest in this traditional territory. And I also wanted to, I come from a small Indigenous community in northern British Columbia and Western Canada, and I can speak in my tribal language. So I wanted to invite you to say a phrase with me in my tribal language, and the phrase is Nian Spe Hunzu, and I think it's a relevant. And you'll understand what I mean when I tell you what it means. It's relevant to the medicine that each of you, I think, have and that PRI has to do good for people and the planet. So Nyan Spe Hunzu means that you are so beautiful to me that my heart leaps up when I look at you.
Wow.
You can say that to your partner if you're ever in trouble, and it'll get you out of jail. One time it'll get you out of jail for you. Nyan Spe Hunzu. So I'm going to get you to say that with me all together. Nyan Spe Hunzu, okay? 1, 2, 3. Nyan Spe Hunzu. I also wanted to invite you now to just meet somebody at your table. This will just take exactly 1 minute. So it's to stand up, shake hands, introduce yourself to a person at the table, just name and where you're from, and then say Nyan Spe Hunzu to the person beside you at the table. So everybody stand up. Please stand up. Nyan, if you can stand.
Yep. Nyan Spe Hunzu.
Nyan Spe Hunzu.
Nyan Spe Hunzu. That's a nice one.
That's fun. Okay, please sit down.
It's only one sentence.
Please sit down. 5 more seconds.
Only one sentence each, please.
Okay. Thank you. Thank you.
It works pretty well.
There'll be
you so
more
much.
time coming where you can talk to people at the table.
Thank you for doing that.
So this is the unconventional approach to a convention.
Yes, yeah. I wanted to just sort of do that to, in part, demonstrate the value proposition of embracing different kinds of epistemologies in the investment work that we're doing, and then to answer your question more directly, Sean. So a bit about Raven Capital. So we're quite niche. We're mandated to invest with Indigenous-owned businesses in Canada and the United States. We're a social impact firm, and our purpose is to improve the well-being of Indigenous people. So quite targeted, and I hope some of what I have to share today is relevant for you. We're small. We have $150 million in assets under management. We're sector agnostic. We're the first Indigenous-owned financial intermediary in North America and maybe in the world. And just thinking about sort of outcomes and goals specifically, it was really important for us to develop a theory of change. And I think, like for many of you, really important to think carefully about your core values and ensure that your goals and your values are directly linked to your investment activities. And a key takeaway and learning in that sort of development of a theory of change process for us, what came to the surface was the need for this idea of culturally safe capital. Culturally safe capital, patient and flexible, but culturally safe, and to the best extent possible, gender safe. And that has really proven to be a pivotal learning process for us in defining our outcomes, and a huge opportunity, I think, to accelerate some of the paradigm shifts that I think many of us are experiencing. So if you're working through your policy and development and strategy development process, I think time invested in developing a TOC that reflects your values, engagement with your team, and or revisiting your existing theory of change and making sure as best as possible that it reflects the current realities of your targeted beneficiaries, I think is helpful. And the broader frame for us was the development of an impact framework. And that really gave us an opportunity to have a consolidated policy space where we could articulate our values, our thesis, our investment methodology, and then subsequently our overarching theory of change, which I think has been had a power of attraction for investors, and that specificity and the drivers around our KPIs and our specific outcomes, and some of that theory framework, I think has been helpful. And we made it open source, so if any of you are interested, you can find that on our website at Raven Capital Partners.
So it's an interesting contrast. I think one of you is speaking from very much a bottoms-up approach of project by project. The other is working from very tops-down theory. I mean, Osha, you said that part of the mandate around AP2 is to think in terms of not just how much money can be paid out, but also how people will be living. You mentioned climate, biodiversity, human rights. How do you think about how does that then influence some of the choices you make about your asset class allocation? How do you start to think about how to deploy your capital to try to translate that broad intention into something specific?
We have these, all of our focus areas in mind by basically integrating our sustainability work with our portfolio managers. So we are quite a small organization. We are within sustainability, we are 5 people. So it's really important for us that each of the portfolio managers really owns these questions and brings it to the table as the investments happen. And then we can, as I mentioned before, we can invest into solutions, and we do this within all the different asset classes. And it's not that we have set a specific target for how much should be invested into this or within which focus topic. So far, I would say that most of the money that and in total, it's about right now, I think it's about 8% of our AUM, which we define as targeted sustainability investments. And we define this by using internally the impact management principles, that there is a positive impact intent at the time of the investment, and that there is some kind of KPI that we can follow up on. So far, most of the investments we made are climate related, because I think there is also a larger pool of possible investments within the space, but we also have made, for example, we participated in the World Bank outcome bond for Amazon reforestation recently. So that's one for also biodiversity. Within our PE portfolio, we have several investments towards education, for example. So we have some social investments as well. So it's really driven by the investment team, I would say.
And I'm curious just on what Paul was mentioning about theory of change. I think that's where a lot of the kind of leading edge of some of the thinking about how do you develop a strategy is going. I'm not aware of pensions that have put together formal theories of change. I'm curious how much that idea resonates, or what sort of discussions you've had internally around how do you help people coordinate?
Yeah, I mean, formally we have also, I mentioned before, we have both these targeted investments, and then we also have, you mentioned that there are also things that we do not invest in, so we have that as well, sort of the things that we have too much of a negative impact, so we are not invested in at all into fossils, for example, or tobacco, and some more things. But when it comes to the large part of the portfolio, what we also do is that we have included impact risk in our risk trees. So we follow up on financial risks, on operational risk, and also on impact risk. So we have processes for ensuring that we do make a due diligence risk analysis within towards all of the focus areas we have within sustainability and within all the asset classes, and that we also act as owners through engagement when we can.
And Hiroshi, how do you approach following? You've mentioned climate as one of the particular priorities for Nippon Life. How do you approach following that across asset classes?
Okay, so the setting target for the asset allocation that contributed to sustainability outcomes is a highly effective approach. So, and I believe everyone here would agree. And Nippon Life has set a target for 5 trillion yen. It's $33 billion equivalent for thematic investment between 2017 and 2030. And additionally, we have established 3 trillion yen. It's $20 billion equivalent allocation for decarbonization finance. And both targets are on track. And additionally, the target must meet the condition of contributing to creation of sustainability outcomes that align with the achievement of the SDGs. In addition, we have set the target for a wide range of investment opportunities across asset classes and sectors, and both environmental and social factors. And furthermore, we have established a transition finance framework in this June. Now, this is because that it is not enough to address the system-level risks of climate change by focusing solely on so-called green finance. Without the active engagement with companies in hard-to-abate sectors toward decarbonization, the negative externality of GHG emissions will ultimately decrease overall market returns. In other words, the idea is that pursuing alpha, the return on an individual investment, will be fruitless if the beta, the return of the market, is deteriorated. In case this happened, institutional investors will not be able to fulfill their fiduciary duties. As you know, Asia is the largest emitting region globally. Since further decarbonization will be necessary in Asia, we believe that in addition to green finance, transition finance is crucial. Our transition finance framework doesn't use a taxonomy-based approach, but rather a principle-based approach, which assists the alignment with Paris pathway in the short, medium, and long term. To put it in another way, we comprehensively evaluate the sustainability outcomes shaped by companies' decarbonization effort. Therefore, we allow companies to use any types of technologies as long as their plans are aligned with pathway. However, even after investment, engagement with invested companies is essential to address discrepancies between initial decarbonization plans and actual result. Additionally, we have made a transition finance framework fully transparent, such as evaluation method and threshold. This transparency increasing credibility, and we also have got many collaboration proposals for investment project. As for transition finance, I believe that Japanese banks and institutional investors are making significant progress compared to other players worldwide. However, since addressing climate change cannot be achieved by Japan only, it is crucial to gain understanding from global investors and collaborate. Through initiative as a Net Zero Asset Owner Alliance, where Nippon Life is a member, it is essential for investors to work together ambitiously toward achieving net zero. But at the same time, there is a risk that a strict GHG reduction target could make it difficult to facilitate transition in hard-to-abate sector. From the standpoint and investor in Asia, Nippon Life has consistently raised this point within the alliance. In that case, the transparency and quantitative specificity of our transition finance framework has been acknowledged, and we are currently in discussion about how to move forward with transition finance within the alliance.
So a call for collaboration, we'll come back to that in a little bit. And it also sounds like a balance between some approaches to trying to create positive outcomes through improving the performance, the decarbonization side, as well as also investing into substitutes and alternatives for the future. And those match different investment theses at the same time. Paul, I'm curious if we could come back for a moment to what you're talking about, a theory of change. And maybe for people who aren't familiar with that term, another way to think about it is just the thesis. If I do A, then B will happen, which then leads to C. And it's applying that in terms of thinking about impact. We have investment theses, also an impact thesis. Theory of change is another way to describe it. How do you use that when it comes to thinking about actually deploying capital? Because you have a very clear purpose, improving the well-being of communities. You have a thesis about how to do that. How does that then interplay with your approach to choosing investment A over B over C?
Yeah, so we've developed an analysis process that measures net benefit to Indigenous communities and produces an aggregate score from a range of measures. In our case, specifically, it's Indigenous ownership, governance, management, employees, and the benefit of the product or service to the communities. And we've developed specific targeted thresholds that we can toggle, which is really helpful for us in the context of portfolio construction. The mechanism is important, but it is giving rise to intel, and I think learnings that is really helping us to continue to transform our process. And one of the key learnings for us that I wanted to comment on is in the context of gender. Some of these statistics will be familiar. In Canada, 4% of venture capital is invested in women-owned enterprises. What's not known is 0.3 of 1% is invested in Indigenous women-owned businesses. Yet Indigenous women represent 5% of the general population. And I think this kind of disparity holds true for a lot of marginalized communities throughout the world, and something that I think all of us are working to address, but it does not reflect our desired future state. And so again, these systems of analysis, measurement, portfolio construction are really in service of us being able to shift our investment practices. So just commenting on that, one of the reasons for that current state is unconscious gender bias through the investment process, including experiences like more favorable reactions to men during pitch meetings, asking different questions of men or women founders during due diligence. And for Indigenous women, this challenge, I think, of sort of unconscious gender bias can be exacerbated by conscious bias that people can often hold against Indigenous people or marginalized communities. And again, as we're building systems and we're deepening our intelligence, I think it's critical that it helps us to understand as clearly as possible the problems that we're trying to solve for and amend our investment policies to address those. So at Raven Capital, we set a target of 50% of our capital to be invested with Indigenous women, and we're meeting that target, and the portfolio is performing well. And I think for us collectively, as we look at our capital allocation strategies, it is, yes, it's important to address the gender gap, consciously through our capital allocation strategies. But I also think it's important for us as asset managers to redouble our efforts to address the gender gap, top to bottom through education, training, capacity building, and policy development. And I think particularly, and I say this respectfully, that for us as men and decision makers in this ecosystem, we still have lots of unlearning and relearning to do to be able to continue to affect the kind of change that we need for generations to come. And I think that's something that we can all embrace.
Thank you. Just for the sound team, is that sound coming through the wall or through the through the wall? Okay. So you get a double opportunity, 2 sessions for one. Maybe picking up a little bit with the start, I think you shared some sort of valuable insights you've derived from the investments that you have been making. You also talked about having a thesis that gives you some sort of a framework for being able to evaluate options and what's going to be the sort of right combination of factors that would make for a good investment for the purpose that you have. And Gwen, what sounds familiar and what's different? I mean, you were talking a lot about very much looking at an asset in a time and a place. Curious.
No, it's very interesting. I mean, what you all were speaking about. I mean, maybe just sharing. The first question was how you choose your asset allocation and how did it change by the time. I think the fact that we did the choice to position ourselves within our investor to be able to be in those pockets, those green pockets of investment, did change the way we are choosing our asset. So it's a kind of a strategic positioning, I will say. Say, okay, we are going to address your needs, these specific needs of being sustainable and aligned with your own KPIs or own research. Then you have to look at your pipeline and what is going to be able to reach your own research. So I would say, first of all, it's a strategic positioning. We could have chosen another positioning being core infrastructure investors, and that could be very, I would say, brown on the spectrum of green to brown. It could be very brown, but we choose to be on the green side without a pure player, without being energy transition pure players, being very, I would say, agnostic in the sector. We invest in transportation, for example. So historically, we have 2 airports in our portfolio. So it's a bit challenging when you speak about climate change there. But things are changing, things are evolving. And by training the team, I would say the investment team, and also having ESG KPIs in their remuneration, it does help. It can't come in the last ones, I would say. It's very, I would say, interesting to see how the pipeline is evolving also within the years. So coming from highways, airports, we have more and more rails, we have more and more, climate solution assets. Same for optic fibers. Optic fibers by nature was a good solution to deploy, and we look at best solution to deploy it. Looking at more and more energy transition, things that we didn't have before in our portfolio. Looking at how we develop the capacity for the team to get better in those topics also. Waste management, heating network, that historically we had a lot of heating network also, but looking at green heating network, it's getting quite natural now for the team, seeing that it's easier also in the investment committee if you come with a greener asset than a very brown asset. The discussion, I would say it's facilitated, I would say. But it's just to see the commitment also of the team at working on solutions and looking at what makes sense for our portfolio and how we can then be transparent enough for our investor to see all the commitment we are doing with our portfolio. So not only winning I would say the reporting championship that we do half year, that I think we are mastering now, and we audit our extra financial data if you are. I would say that's the next step of commitment, but it's something that we believe makes sense because for now, extra financial data are self-reporting. I think it would make sense for the market to consider extra financial data the same way they consider financial data. It's what's happening now with the corporate world in Europe with CSRD, is go next step and audit it, but that's another discussion to have. But I would say once you show to the investor that you are willing to play that sustainability topic, then it's once again how you implement it with your asset. But to go beyond that, I would say how you become a best player at the asset level, so at the sectorial level. And one thing that has been put in place within Vauban is the open research. So it's how you put around the table with an annual thematic academics who are Nobel Prize, who did very nice research on the topic, but not always read by the industrials. How you put the top CEOs around the table with those persons who are knowledgeable but not so much practitioner, and how you put the regulator around the same table. And you have very interesting conversations going there. So every year we have a topic. It began during the COVID, in fact, and let's be honest, it was a way to show off our investment in optic fiber. So it was digital infrastructure, so 4.0 infrastructure. It was during the time of COVID. And then the conclusion was it's great to deploy infrastructure, digital infrastructure. So what about energy efficiency? What about energy consumption? What about climate change? And what at the time we're implementing our own climate strategy. So we did a research on climate. And then it's, okay, climate, it's not only a transition, it's a revolution. It was a time of the yellow vest in France, so you can see the reference. If we don't do it with the people, they are going to think it's against them, so nothing is going to happen. So you have that green transition, which is the green revolution, I would say, can't be done only by the investor and the regulator, but also with the social aspect and the acceptation from the citizens. So it was a question of social license to operate. And then from there, it's not only climate, it's circularity. If you don't tackle circularity as a globality, climate it's just, your carbon emission is just a small piece of the problem. Then you have to look at how the conception of your infrastructure, the planification of your infrastructure has to be tackled from the beginning. Recycle part of it, I would say, is the last will of the problem, is how you consume, how you put in place those pieces, and having a conversation with the European Commissioner, and having on the same table the representative from Total and the representative from Paprec, which is the third largest recycle company in France, and having the regulator here and the academics who are teasing everybody was extremely interesting, because you see that they are not so used to speak together and to get out with some real conversation about what does make sense for the industry, what does make sense for the policymaker, and at the end of the day, what does make sense for the citizen, for the society. We keep saying we are essential for the community, essential infrastructure, so we have to prove it. Mm-hmm. So this year, the topic is about inclusive infrastructure. So basically, it's great to deploy great infrastructure, but how do we make sure that it makes sense for all citizens, that we open the door to all of them and how we make it work. And I think we have discussion about the KPIs because it's not always easy to measure it. I say climate is maybe the easy one, and we can see from all the conversation we have had those few days, it's not that easy. We have to find the right framework and have the right calculation on our scopes. But social impact, I would say it goes hand in hand. We should have the same conversation about scope 1, scope 2, scope 3 of our social impact and how we work together as a system, because we'll not have any climate transition if we don't have that social transition going ahead. And then you have a digital transition, that's another topic. But if you're interested, more than happy to share about this topic. It's very infrastructure based. Sorry, I'm very focused on my own sector, but more than happy to share more about those topics with all of you. I say collaboration is one of the key, and not be too ashamed of working with our peers. We have to learn a lot from each other, I would say.
And so I think the last quick thing we'll try and do on stage, and then I'm just watching the time so we leave an opportunity for people in the audience to talk with each other. But you've taken us into the work describing the work that you've done of bringing together different stakeholders to explore a problem is both something which is about how to understand what's going to be an effective action to take, but it's also then starting to take us into the last kind of question of how do you think about your role as an investor separate from the company that you are invested into. So just for the others, I'm curious if you have any thoughts you'd like to share in terms of how you think about the contribution that you aim to make towards real world outcomes as an investor, separate from what the company itself is doing. See if anybody wants to start.
I think we will work. It's hard for me to separate from the companies because that's really where we have our opportunity to have a positive real world impact. And I think the targeted investment is one thing, but I think this taking your responsibility as an owner and taking your seat at the table, which you have as an owner, and especially as you mentioned as well, together with other investors through collaborative engagements. I think we have a lot to do there and a lot to achieve in terms of positive impact.
And I know Hiroshi mentioned the work you do around engagement through Nippon Life.
Yeah, so I'll show the unique engagement in Japan. And one such initiative is the Japan Impact-Driven Financing Initiatives, which has been joined by impact-oriented investors as well as business companies. Nippon Life has participated in as well. And so in this initiative, companies striving to create impact and investors who support them have come together to start research. And here, please let me share the interesting finding from our analysis. When analyzing the correlation between CDP ratings and corporate value, there was a positive correlation globally. The higher CDP rating companies have, the higher PBR and ROE they have. However, surprisingly, for Japanese company, we observed that there are no positive correlation. We named this the CDP paradox, and we are working with initiative members to solve this mystery. And while we are still on a journey to solve it, the hypothesis is the profit creation and opportunities may not be adequately reflected in the company's transition plans. And this is not a problem only for companies. Investors need to confirm how companies are balancing transition with capturing revenue opportunities and linking this to long-term corporate value. After this confirmation, investors should support companies through financial backing. In other words, only through continuous dialogue between investors and companies can impact creation be properly evaluated. Without this, it will be difficult to fully engagement in transition finance. Therefore, we are committed to advancing this discussion within this Japanese initiative. And addressing systemic risks require understanding the interconnectedness of sustainability issues. We like to tackle these challenges by bringing together investors with expertise in different fields, but with the same aspirations.
Thank you. And Paul, any kind of thoughts that you wanted to share on this before we turn over to the room?
Yeah, just the idea of reporting burden, yeah, we're shifting significantly towards investor contribution in the context of pre and post investment capacity building, and I think that goes up the further you reach into marginalized communities. Yeah, so yeah, we haven't touched on it much, but it's a huge variable, as you know, in this space, Sean, is the burden of reporting, data collection, and such a critical part of the credibility that I think so many people in the impact space are trying to earn. But the cost, particularly in the economic climate that we're in now, and the optics, if not the reality of the burden of data collection and reporting, I think is pretty material. And I think, going over the next few years is going to become increasingly material. So excellence is effectiveness and efficiency is going to be our friend, I think, as we go forward. So.
Okay, so now we're going to try something experimental and therefore a bit risky. For the last 15 minutes, I'm going to invite you to talk with people at your table. I would normally say introduce yourselves, but you already know that you're with lovely people and you had that opportunity. And maybe two questions that you can reflect on together. One is, what have you heard that sounds similar or familiar or resonates? And then the second, what do you do? How do you approach trying to pursue real world outcomes in your investing? Now, the risky part is we'll need to get your attention back in about 15 minutes to close this. So just please keep an ear out for when we try to clap hands or whatever it is to draw the signal that we're going to be coming back onto the stage for the final closing. But now turn it over to you, turn to the people at the table and have a short reflection in terms of what we've been discussing on stage. Okay. If I could have everybody's attention again, please. So, glad that people are engaged in the conversation and just walking around. It seems that people have points of view that they wanted to share. We just have a couple more minutes before we break the session. I wanted to first just see if there's any of the people who are from the audience who want to share any thoughts that either came to you personally or some of the topics that you've been talking about at your table. Just a bit of a quick sharing within the room, 2 or 3 people, and then we'll come back to the stage for a closing thought from those of us up here, and then we'll call the session to a close. But is anybody ready to share a little bit of a personal reflection or a table discussion? Volunteers? I see somebody being volunteered. Thank you.
Thank you, no pressure at all. How am I going to describe this? I need to keep it interesting. We all want to leave in 2 minutes, and there's a lot of expertise that I need to summarize, so wish me luck. On impact specifically, I think the main note that I took away is I like we were talking about technology. So back in the day, there might have been a tech investment team, and it would have been 3 people really just thinking about what are the investments in this category, and now technology is everywhere. So I've come from the impact community. I'm at Upright Project, and I feel like impact is still a loaded term for a lot of investors. And it was nice to feel like now, especially if we think about Florida, impact is now everywhere. So I feel like we're now at that stage where we're normalizing it. We need the information. It's going to be embedded with everything we do. But it's just not obvious where we go from here, especially from an additionality perspective.
Thank you. Definitely, as I walked the floor, I heard a number of tables are having some conversation around data, around measuring, around deciding what counts, what doesn't. Anybody else have anything they want to sort of share from their table? You'll get fed afterwards. Okay, we'll do one more. Thank you.
Hi everyone, my name is Hazel Ransom. I work at the PRI. So on our table we had a really interesting discussion about the challenges to doing impact and the different levels of influence you can have depending on whether you're a private equity or public equity or indeed private debts and private credit being even more challenging. Regarding challenges, we also talked about the definition of impact itself and SFDR and how lots of reporting around the world, including SFDR, may be misaligned with how investors are doing internal reporting around impact and how we balance all of that out. And then, yeah, actually a more thorough discussion of whether we need to define impact or not and whether that's helpful for the debate.
Okay, thank you. So with that, there's a lot more that was discussed, as you could kind of hear from the noise around you and your own table. Hopefully you've met people, and if you had a topic that was catching your attention, you now have some people that you can specifically follow up with over lunch and continue the conversation. But maybe for the purposes of this session, I'm going to turn to our panelists for a closing thought or observation from them, and then I'll have a couple quick points to share, and then we'll call it a day. Hiroshi.
Okay, I'm very happy to be here and to listen to the variable discussion. And the Nippon Life aims to develop strategies to addressing system-level risks to the relate and ultimate beneficiaries. Thank you very much.
Yes, and I can just say that all, as investors, we all do have an impact, whether we want it or not. So I think it's sort of a call to action to work on that impact and make it as positive as possible.
Yes, maybe just to resonate to what you're saying, let's all get out of the data management madness. Hopefully, artificial intelligence will help us for that. And let's go to what is really material on the ground, what does make sense, and let's get back to business and make it sustainable for the good of all.
My closing thought is about the UN Declaration on the Rights of Indigenous People as a guiding framework for investment practice. It's often seen both in a human rights and government-to-government context. We are working hard to grow a community of practice. There is an EU-funded organization called the Indigenous Navigator, who has done an incredible job of building out impact categories, and then sample indicators. If you're looking to find ways to align your investment policy to the UN Declaration on the Rights of Indigenous People, I participate in New York each year at the UN Permanent Forum on Indigenous issues, and I see more and more asset owners and asset managers attending the UN Permanent Forum, predominantly out of a curiosity of the interface between Indigenous territories and the just transition, specifically access to transitional minerals and the recognition of this idea that we have to sprint, but half of all of the mines that we need to open in the next 10 to 15 years are on Indigenous territories, and relationships and relationship building and sprinting often don't go well together. So UN DRIP, Indigenous Navigator.
Thank you. And as moderator, I'll take a closing prerogative of there are 5 things I took away out of the sort of sum total of what people were talking about on stage, and a little bit of what I picked up from the floor. The first is thinking about beneficiaries and exploring what their broader needs are. That's an opportunity to start thinking about a broader range of serving and supporting them. Second is thinking about the possibilities, the value of an impact thesis, how that can be useful in terms of structuring ideas and thinking about both what's an important investment and what's important about an investment. Third, I think there was a lot that was shared in terms of thinking about investing and outcomes as being tied or connected to times and places. And so making it something that's concrete where you can relate it to a biophysical or a socioeconomic thing that will change, a parameter that will change. Fourth, that there are opportunities across the portfolio. We heard examples that were about trying to mitigate negatives, about investing into positives. Some of them were in listed equities, some were in bonds, some were in private debt, private equity. But an idea can be followed across a portfolio in service of broader needs. And lastly was the opportunity to try to work with other stakeholders outside of finance in the interests of advancing a thesis that serves the needs of the beneficiaries and speaks to a time and a place. So with that, thank you very much for your time today. I hope you'll join me in thanking our panel.